Good afternoon, everybody. This is Hunter Mozingo, Associate Portfolio Manager and Research Analyst for Revere Asset Management, bringing you your daily market insight video here on Thursday, July 28th, 38 minutes after market close, 4:38 p.m. Eastern Time here in Jacksonville, Florida. And today we've got a lot to talk about. We're going to talk about whether or not the market has changed character and how you can quantify that looking at the charts. We're going to talk about Apple and Amazon earnings, which just reported after the close, and we're going to kind of take a sneak peek. I haven't seen the numbers, but we'll see what the reactions are here on this video, as well as we're going to look at some of my top stocks, some of the best performing stocks of the day. Also, the usual, the lagging sectors and stocks as well. So before we get into all of that, I would like to say this is going to be my very last daily market insight video here with Revere Asset Management. You will get the podcast probably tomorrow or this weekend, and we talk about what's going on there in a lot more detail. But again, this will be my last daily market insight video, and so I would simply like to say thank you to everyone who has listened or watched these daily market insight videos I've been putting out. Anybody who sent in an email to ask a question, sent in a compliment, anything like that, I just want you all to know that I appreciate it from the depths of my heart. It's been a really cool journey getting to do these videos and provide this content and be a part of the Revere team. But again, this will be my last one, so I'm going to try and knock it out of the park and give you all the best information that I can. So let's get right into it. What just happened? Back-to-back green days post-Fed, and that's really, really important. We haven't seen that really this year. It's been a green day type of reaction and a brutal sell-off the next day. So a big deal. We're going to talk about that more in detail. Strong follow through on yesterday's action. G6 up 1.3, S&P up 1.2, Q's up about 1, Dow up about 1, mid and small caps both up closer to 1.5%, mid 1.55, Russell 1.34, 60/40 up 0.86, and Grotection up 0.52 today. So market state still the same, correction, but short-term uptrend. And then no changes to the trend gauge either. You'll see Don make changes there if appropriate. I do believe it looks like Apple and Amazon are moving higher in after-hours trading. If that holds, there could possibly be some changes there on the trend gauge as well, but no changes for right now. So before we get into the tail of the tape, we're going to briefly highlight Revere one last time. This email will be going away pretty soon, but if you want to send me one, I'm here through the end of the day tomorrow. You can send me an email at hunterrevereasset.com, or you can always email Dan, Don, Merrill, or Michael at revereasset.com. A new guy that's on the team. He also was on the podcast. You'll see him as well. So make sure you check out the podcast this weekend, or if it comes out tomorrow, just make sure you check that out. But again, this is my email if you want to send anything in before I'm gone. But this is the emails of everybody else here, Dan, Don. And again, you can always call 855-732-5932, and you will get this fella right here on the phone. So let's get to the tail of the tape. I've got the S&P on the right-hand side like I usually do. Market state, just covered it. Sentiment-wise, put call hasn't really come down. It's still around 1. We've been talking about it for months in my videos. Hanging out in this 0.9 to 1 range, closed at 1.02 today, and that tells me that people are still wanting to short this market. And jumping at the bit to short it. And that's very common in a bear market, very common in a bear market rally. But we have not seen this come down significantly yet. And it may not, it may not go as low as it used to, but the point is we really haven't seen it move out of this kind of 0.9 to 1 range substantially, at least to this point in time. VIX has come down a little bit, 22.33, below that 24 level, down about 4% today. Fear greed still relatively low, a 39, and still in the fear range. Bull case, initiate a rally, reclaim 21 EMA, 727 Fed. You can see that here on the notes. That is the case that is in effect right now, and that action has certainly been confirmed with today's behavior, which is really what we wanted to see coming into today. Notes, top 5 or 5 of the top 7 QQQ names report this week. Tuesday, we had Microsoft and Google, both of which had good reaction. Wednesday, we had Facebook, which did not have a good reaction. Thursday, we had Apple and Amazon, which is just right now after the close. And so far, it looks like Amazon had a pretty positive reaction, up over 10% or around there. From what I can tell, it looks like Apple's up 2 to 3%. So I haven't seen the numbers, but right now the reaction looks relatively decent. News-wise, GDP came in at negative 0.9 versus 0.3% expectation. So not good on GDP, but the market shook that off and handled it pretty well today, as you can see. Friday, we have PCE inflation number. And then lastly, on the news front here, solar and clean energy had a big day today after already having a big day yesterday on mansion-backed budget agreements. There was some commentary that there'd be some climate and clean energy components and whatnot. So a back-to-back big days for solar, and we're going to look at those charts in depth here in a moment. What were we watching? S&P versus support. It didn't get down to 39.74, kind of held around 4K and then blasted through resistance here. QQQ got close to 300. That's supposed to say above. I don't know what happened with my typing there, but basically got down to right around 302, bounced and proceeded to get above this 308.50 level by about $1.50 or so, maybe a little bit more than that at the highs of the day. Action-wise, opened up just slightly and then proceeded to look like we might start to have a sell-off, kind of like we had on prior Fed day rallies, where we had a big up day and then just a brutal, nasty down day right after. But S&P really held up pretty well during that. S&P was only down about 30-40 basis points, and NASDAQ was down closer to 1.3 at the lows, both of which ended up making strong recoveries by the end of the day. Range today, like I said, just slightly below 4K, 39.93 to 40.78. And as far as performance goes, we had, again, S&P up 1.21, G6 up 1.31, 60/40 up 0.86, protection up 0.52. Sector-wise, bonds and stocks moving up together, becoming a recurring theme. Gold, silver, and miners green, tan, bigly green today. XLB, IU, and RE, as well as ITB green today. Oils ended up reversing off of their early gains in the morning. Not all of the ETFs and stocks finishing red, but a good bit of them. Biotech's weak today, but nothing really out of the ordinary, hanging in there relatively well. China weak as well. Portfolio-wise, we sold half of XBI and we bought 2% of SI, which recently had a powerful gap up and has acted pretty well. Bottom line, back-to-back green days following the Fed. It's a big deal. We're going to talk about why it's a big deal here in just a second. Today's close, highest close since the 6.9 gap down. That's this day here, and back above 40,000 level with some conviction, as you can see as well. So a big deal here. We're back above 4,000. The 21 is now crossing up through the 50, and the 8 EMA is moving up pretty rapidly. You're starting to see that 50-day go flat to start to curl, and that's really what you want to see here as the markets have continued to move higher off of these recent lows. So moving along here to the S&P, we're going to talk about key levels real quick, as well as what I mean when I say has the market changed character. So key level first that we want to mention, 3,900-ish is the level we want to talk about. That was the big level to clear here, that, as you can see, like we did right here. That was a huge level to get above. It was resistance, and we did that. And now we have the moving averages converging. So this 3,900 to 3,920 area, that's right where the 50 and 21 are. Worst case scenario, if we had a really bad pullback, you want to see that area hold up at the bare minimum. Now that we've cleared 4,000, I think from a bull perspective, you're looking to see that hold up and act as support, and that's exactly what we saw today. So the S&P, it is a little short-term extended here. I would keep that in mind, but we were also extended to the downside a lot this year as well. So short-term extended to the upside in relation to the 21E and things like that, but really strong action after the consolidation back here to the 50 and kind of rocket launcher mode off of that. QQQ, similarly, that same level. And again, I talk about this on the podcast too, so please check out the podcast. I talk about it in depth. This 295 to 297 level, major level that you want to see active support. That's now where the 21 and the 50 are kind of in. You see the 50 starting to curl, the 21 right there around 297. You want to see that area hold at a minimum. But again, this 300 level is what I'm looking to see it stay above, and that's what happened today. So you got 295 to 297 is kind of the last leg. You want to see that hold up. But now that we've cleared these key levels, 4,000 on the S&P and 300 on QQQ, you want to see that big psychological level act as support as well. IWM, the big level for it to clear last week was 175 to 178. We did that. Again, the moving averages are right in that range. 21 now crossing up through the 50 for the first time in a while. And you can see significant strength here from small caps as it's closing at the very top of the range, finally coming to life a little bit and moving up. You see the moving averages are curling upwards here, the 50 and the 21 on IWM. MDY, very similar. Basically the same situation here. big level to get above was kind of 425 to 430. We did that. The moving averages are now above that. And again, curling and moving up. So you got short-term extended here on the indices, but you have to keep in context with the action we've had this year. We are coming up off of the lows here in a pretty vicious fashion. Sometimes when you get a strong move like this, things can stay extended or stay overbought. So keep that in mind. I know there's a lot out here saying, looking for a pullback. Sometimes you don't always get the pullback you want, and the market kind of keeps you out in that sense. So Dow Jones, last thing we're going to look at here on the indices. Big level to clear was kind of this 315 to 318 area. We've done that. Again, moving averages right there in that range, right here at 316.21, crossing up through the 50 today, basically. So that's the indices. That's the key level that I'm looking at to the downside, is that big breakout level that I talked about last week. Now that that has been pushed through, I want to see that act as support. You've got confluence there with the moving averages that are crossing up through each other. And again, a little extended to the upside, but nonetheless, we've been extended to the downside a number of times this year, have very little opportunity to be extended to the upside. So the indices moving higher, price action confirming that this rally, at least for the time being, is still alive. So let's quickly go to the dollar, because I think it's of utmost importance. This correlation is massive, okay? So the stocks and the US markets in general have been very correlated to the dollar since this has come off. That is essentially since we've seen the S&P, the Qs, the other indices move higher, push past those resistance levels and continue up. You can see this had a harsh reversal yesterday after the Fed, and today closed at the bottom of the range. If this continues down, that is a good thing for stocks and for equities. There's no getting around it. Pay attention to the dollar. Next, TLT. This is the 20-year Treasury bond ETF. 21 is above the 50 for the first time since the end of last year. This is a big deal because this is possibly setting up at least for a short-term uptrend. All the moving averages are stacked, at least on the short-term basis. The 8 above the 21, above the 50. This continues to move higher as well. So TLT moving higher, which what does that mean? That means TNX is likely moving lower. And what's happened today, we lost this 27 level. I talked about this last week and maybe even on Monday's video. What happens if when we come to this 27 level? Do we end up holding right here? And the answer is no, we didn't, at least for right now. This 27 level has been lost on TNX, meaning all of these moving averages are now crossing over to the downside. That means rates are coming off, yields are coming off a bit. And again, same way with the dollar, that gives some relief to stocks, specifically growth and technology related stocks. So now let's get into some charts, some individual stock charts. And I'm going to start here with Tesla, which up about 2% today, had the big earnings gap here, as you can see. And Tesla, although it's below this 200-day moving average, I think is showing some nice characteristics here compared to a lot of the other big cap tech stocks. And for one, it's the EPS growth, and for two, it's the revenue growth. These numbers look different than Microsoft, Apple, Google, Facebook, what have you, because Tesla's in a different stage of its life cycle. So in my opinion, and I'm going to give you 4 stocks that I think have some great potential here, as this is my last video. Tesla is one of them. As far as the big cap tech stocks, I think this is one that still has true market leadership type of potential. Obviously, you want to see it get back above the moving averages. You want to see it get back above the 200-day and have these moving averages in the right order. It's starting to do that now. As you can see, the 8, 21, and 50 are assimilating. But I like the way Tesla is acting here, and I like the fact that it's pushing above this high here by just a little bit today as well. Microsoft also having a strong day and following through in a great fashion after its earnings here. As you can see, EPS on 726, and it has been pretty much straight up since then, back above the 50, back above all of these key levels here. This 270 area was a big spot to get above. So Microsoft and Tesla acting well out of the big tech names today. You've also got Bitcoin acting well today, BITO. This looked like it was possibly going to tuck back in and break down, and it's now up here, as you can see, up against the 50-day. Bitcoin itself up around 24,000 today. Moving along to a couple of semi names that are acting well. KLAC, which I think reports today, acting well above the 200-day on semiconductor. Acting well also right here, looking very constructive in regards to the chart. ADI, Analog Devices, also another semi name acting well above the 200-day. So there's 3 lesser mentioned semi names there that are acting pretty well. We talked about solar having a big day. Here's some of the solar names that you want to pay attention to. PWR, a really strong and nice breakout today. ENPH, that's the one that had the earnings gap up yesterday, another gap up today, ended up closing around the middle of the range. So ENPH, PWR, two of the strongest names in that kind of space. Sedge is the other big name that's in there. You can see it's very volatile, as you can see, but again, trying to move to the top of its range. And then lastly, TAN, which is that ETF, acting very, very well. So a couple more names here that I want to point out. CMG holding its breakout very well and moving up to above the 200-day, above yesterday's high. And this is something that's important. We're seeing breakouts work and breakouts hold. I got 12 alerts today on breakouts in MarketSmith. All 12 were in different industry groups. That's something that I probably haven't had double-digit breakout alerts the entirety of this year. So moving along quickly here, Costco, a more conservative name, but coming up sharply off that 200-day, as you can see. And then just a couple of names in the growth space that were acting really well today. Bros, up about 10% today. Celsius, a name that's continued to be a very strong name. This is the second name of my list, along with Enphase. So Tesla, Enphase, Celsius, I think are some of the strongest names in the market right now. CrowdStrike having a good day today. And then lastly, on the growth front, I think this GTLB still has a lot of potential here. Not the strongest today, but attempting to reclaim the 21 EMA here. I think this was one of the first names to really start showing relative strength in the growth space. I'd keep a close eye on this one and how it begins to develop over the course of the next few months. On the flip side, we saw HAL weak today. These oil services names have kind of struggled more so than the other names. So I mentioned not all the oils were down. Some names like Fang were actually still slightly green today. But a lot of the oils ended up reversing lower. So HAL down today, SLB, the other oil and gas services name, also down a little bit today. We saw Facebook down on earnings, about 5 or 6% or so. We saw Qualcomm down on earnings, down about 3 or 4% or so, but bouncing off the 21, as you can see there. XBI was weak today, but again, nothing necessarily wrong with this chart whatsoever. China stocks also weak today. FXI, as we mentioned, kind of breaking back down below those moving averages. AMR and Arch, the coal names, pretty nasty looking candles on both of these. As you can see, these are super volatile, but these are the commodity names, and both of these down pretty significantly today. CF and MOS also down a little bit after their strong move up over the course of the last few days. And last couple here, BRTX and INCY, laggards today, both down about 2 or 3% or so. So that's the bad. Again, those 4 names that I mentioned that I think have some great potential: Tesla, Enphase, Celsius, and GTLB. Obviously, there's a lot more out there, but those are 4 that I think are pretty solid. So again, this is going to be my last video. This is it. That's all I've got today. So I just want to say thank you for listening. Anybody who's out there who's listened to my videos, thank you. And I really appreciate it. So this is Hunter signing off for the very last time on my very last Daily Market Insight video. I hope you all have a wonderful weekend.